What's up guys, in today's video I'll be showing you everything that you need to know about chart patterns in the market. I'll be showing you the classes of chart patterns, and also I'll be showing you the 10 best chart patterns that you can trade in the market and make reasonable profits from it guys. I'll be showing you everything in this video. So what is chart patterns in the market? Chart patterns are a visual representation of the price movements on the chart. So these chart patterns are just historical movements that have happened in the market before, and from there we will try to take the same steps again and see if it's gonna work for us. That's how chart patterns work in the market. And we have a lot of chart patterns in the market, which I will still love to show you in this video so that you can get the full information and get to do the right things at the right time. Very important whenever you want to trade the chart patterns in the market. And under these chart patterns we have two classifications of chart patterns, which is the directions and also the types. When it comes to directions in the market, we have uptrend and we have downtrend. We have chart patterns that go to the upside and we have the ones that go to the downside. So these chart patterns move by direction also. And by the types of the classification of chart patterns, we have three of them. We have the ones that works with the reversals, we have the one that works with the continuation patterns in the market, and we also have the ones that work with the neutral patterns in the market. So looking up to this first one, which is the reversal patterns in the market, we have patterns whereby the market just have to go up a little bit, then draw down again, then from that side you start pushing to the upside again. Sometimes in the downtrend also you see places whereby the market just have to go down, go up a little, reverse again, and from there the market keeps drawing to the downside. And also we have the continuational chart patterns, which are those ones that keep going with the trend of the market. For instance, if the market is in an uptrend right now, the continuational patterns will keep going with the trend of that market. Then when the trend is over, then you can start seeing other movements in the market, other chart patterns in the market that will just show us another movement in the market. Chart patterns do come out in the market very well. The problem is just you knowing how to spot the right one at the right time. Then you can know what you're actually going to do in the market and still make money from the market. Very important. And also we have the last one, which is the neutral chart patterns. These neutral chart patterns are those ones whereby the market doesn't have a special direction in the market. And these neutral chart patterns mostly occurs in consolidating market, where the market is kind of looking like it's going to go to the upside and it's somewhat looking like it's going to go to the downside also. So there's no special place whereby the market is trying to go to. All you just have to do is make sure that you follow up with the trend of the market. Then if the market goes to the upside and gives you a reversal on the neutral ones, you can just follow up with it. So let me show you an example of these neutral patterns in the market also. And the last part is that part whereby you have to know the best 10 chart patterns in the market so that when you spot them in the market, you can make crazy figures from the market also. So I'm about to show you these 10 best chart patterns in the market right now, and I want you to make sure you pay attention to the things I'm going to explain in that video so you can get to understand this faster. So make sure you watch to the end and get to learn these best chart patterns that I'm about to show you right now, because there are a lot of them and I just picked these ones out for you because these are the ones that work for me and I want it to work for you also. If you get to miss anything or you get to misunderstand any part of the video, just go back and watch it again so that you can get to understand these things very well in the market. Let's go. So the first pattern that we're going to discuss about today is the breakout double top. So the breakout double top, just like the way it sounds like the main double top, is a different double top on the market, and this is how it looks like in the market. This is how the breakout double top looks like, and the double top itself looks different from this one. But the breakout double top seems to be the one that used to occur mostly in the market. So let me explain this in a very good way for you so you can get to understand it and know when to use it in the market also. If you look at this side, you can see the arrow in that place. So I'll be using that arrow to explain this for you in the market. So on this breakout double top, we have our first stop in the market, which is this place. We're going to mark it as our first stop in the market. Let's do that right now. So this place whereby my arrow is right now is the first stop in the market, and I've marked it out with that arrow around that place. So whenever you want to place the first trade, you can't use this place as our entry in this market. If it is the regular double top, you can just use that place as our first stop and it will be the major point in the market. But on this breakout double top, the market will have to come back and break that place, then we get the major point, which is the point 2 in the market. That's that place whereby you're seeing that 2 in the market. That is our major point when it comes to this breakout double top. Then from there, the market will just go down and break the neckline. After the market has broken the neckline, which is this point whereby we have 3 in the market, which is the place whereby the market will just have to break into again, instead of the market to come and use that place whereby we have our neckline already. This is our neckline in the market. Let's mark it out also in the market. So that point whereby we have our horizontal line is the neckline in the market, and the market will still have to come back and break into that place. That's what makes it a breakout double top. Then from there the market will keep going down straight, instead of the market to just come back to the neckline and get a touch around that place. Then from there the market will keep pushing. On this one it doesn't work like that, so the market will have to come back to this place, break into this point, then get our third entry around this place. Then from this place you can make your entries in the market, and if you want to place this entry in the market, you have to use this part as your stop loss in the market. So this is our first region in the market. We're going to mark it out as our stop loss area in this market, and this third place becomes our neckline area in the market, whereby the market will just have to break into that neckline area. Then from there the market can start going to the downside. So that's how the breakout double top works in the market. And also we have an opposite of it, which is the breakout double bottom. So let me bring out that one so we can explain it in the market also. So this is the second part of the breakout double top, which is the breakout double bottom. And just like the way we have the breakout double top, this is an opposite of that one exactly. So what is going to happen in this place is just like the way the first one happened, and the market had to come to this place, which gave us our first zone in the first one. This place is our first zone in this one also, and we have our second zone also in this market, which is this other place, and we have our neckline around this place. So this place is our neckline on this one, and this is the point whereby the market will have to break into the neckline also. Then from there the market will start going to the upside. So that is how this one works in the market. You expect the market to go to the upside in this one. Let me mark it out so that I can get to understand it faster also. So let's bring out our typing tool in the market. Let's type this out again in the market. So the first one is this place, which is our first top in the market. We're going to mark that one out, and we're going to mark out the second top in the market also. So we're going to write 2 in that place. So this is our second top in the market also, and our neckline, which is the third point in the market. So I'm going to use 3 on that. Then this place is our neckline. So this first one is that place whereby we expect to get our first entry around this place, which is the first top in the market. And this second top is the place whereby we get the breakout in the market, while the third place is the place whereby we get the neckline in the market. And on this one, if you look at what the market is doing exactly, you will know that the market will just get to a neckline. Then on this neckline place, the market will just have to break into it. Then after the market breaks into it, we get the move to the upside. So when it comes to the breakout double bottom, we expect buys in the market, and when it comes to the breakout double top, we expect sales in the market. Let's mark this out also in the market. I think I forgot to say it in the first one, but if you're someone that watched to this point, you have gotten the information already. So let's write it. And also don't forget that on the breakout double top, we expect the market to sell after the break on the neckline. So that's what we expect on this. And on the breakout double bottom, we expect the market to buy also. So let me show you how that one works in the market also. So on this breakout double bottom right now, we expect the market to buy after the break in the third place, which is our neckline in the market. So after this place, we expect buys in the market, and from there the market will just keep pushing to the upside. And also let me show you how these things looks like on the chart, so you don't get confused whenever I see these opportunities in the market, and get to use it at the right time. So this is how the breakout double top looks like in the market. So whenever I see this kind of chart patterns in the market, I'm sure you know what to do already. So this is that place whereby I used to explain the market as our first top in the market, and we have our second top, which is that place whereby the market have to break that first top and tell us that this is a breakout double top. Then from there we have our neckline, and the market has to break into the neckline also, just like the way I explained before. Then from there the market keeps dropping to the downside, just like the way you can see it on the chart. So this is how the breakout double top looks like in the market, and if you turn it upside down, you get the breakout double bottom. So that's how it works in the market. Let's get to another example of these chart patterns in the market. So the second best chart pattern that we're going to discuss in today's video is the double top. Just like the way I said that the double top is different from the breakout double top and double bottom also in the market, I would love to explain it so that I can get to understand it also in the market and know what we are doing in this market. So we have our first top, we have our second top, and we have our third top in the market, just like the way we used to have it in that breakout double top in the market. So let me use my arrow and explain this for you so you can get to understand it. Look at this place whereby the arrow is right now. Look at this point, which is our first top in the market. That one is the major top in the market. While on that breakout double top in the market, the second top is the major top in the market. So in this place, the first top is the major top in this market. So what happens on this one is that once the first top is formed in the market, the second top will not be able to break the first top. But if you go back to that first one, you know that once the first top is formed in the market, the second top we have to break the first top in the market. But this one, it is different on its own. So in this place, the second top is not expected to break the first top in the market, and on this place is the neckline, and in the neckline point of this one also, the market is not expected to break into the neckline. So the market must just end around the neckline, just have a retest around that place. Then from there, the retest will just keep going to the downside. That's how the double top itself works in the market. And if you check it very well, you can see that this one is totally different from that first one, which is the breakout double top in the market. And in this one, which is the double top, we expect the market to sell, and on the double bottom we expect the market to buy. So this is what we're expecting in the market. Let the market get back to this neckline, then get a retest around this place. Then after we get a retest around this neckline, we'll sell from that point. And you can use this place, which is our second entry in the market, as your stop loss area in this market. So in order to know that this is a valid double top in the market, we expect the market not to break this second point. And if the market just get a proper retest around this place, that's it, perfect. Then we get our entry into the market, and we take our sales from there to wherever the market is going to end. For instance, we expect the market to get back to this place, then we're going to put our TP around this place, and trust me, the market is going to break it. That's how this one works in the market. So that's how the double top works in the market. And when it comes to the double bottom, it's just like an opposite of the double top in the market. So let's get to explain this also. So here we are on the double bottom right now, and this is just an opposite of what happens on the double top. So when it comes to this double bottom also, we don't expect the market to break into it at all. We expect the market to just get back to that place, then get a retest around that place. Then from there, the market will keep going to the upside, because on the double bottom, we buy in the market. So we're going to bring that out right now. I'm going to write it out again so we can know what we're doing in the market. So on the double bottom, we buy in the market, and when it comes to the double top, we sell in the market also. So this is how it looks like, so that whenever you see the opportunity in the market, you can just mark it out in the market also. But I would love to show you on how it looks like on the chart, so that whenever you see these opportunities, you don't have to miss them at all in the market. So let me bring out my chart form of this. Let me show you how it looks like on the chart exactly too. So this is how it looks like on the chart, and this is the first place where we used to draw as our first point in the market, which is our first top in the market, and this is our second top in the market. And just like the way I explained it before, the market is expected to break this first top in the market. So the market will just have to come back and come very close to it, which is the second top. And from there, we have our neckline, which is this place in the market. And the market will just have to come and get a retest around it. So this place now, you can see this candle around this place. This is an hidden order block candle in this place. And the market just came very, very close to that place and had to keep dropping again. So looking at this place already, you can see that the market has confirmed it with this hidden order block candle around this place. Then from there, the market just engulfed again, and that's a sign that this is going to be a very good double top in the market. And from there, the market kept behaving as if it's trying to consolidate a little bit and kept going towards the downside in the market also. And when it comes to the double bottom part of it, you expect the market to just do an opposite of what I just explained in this place. So that's how the double bottom works. And this is the double top part of it. Don't forget, the market is expected to sell when we have double tops in the market, and the market is expected to buy when we have double bottoms in the market. So keep that in your mind, and don't forget that also in the market. And this is how it looks like exactly on the chart. So whenever you see these opportunities in the market, make sure you use it very well and make sure you understand it, so that you can get to operate it in a nice way and make crazy figures from the market also. So let's get to the third chart pattern in the market, which I'm going to explain also, so you can get to understand it in a faster way. So this is our third best chart pattern in the market, and I'll be using this arrow to explain it for you in such a way that you get to understand it faster in the market. So look at our first top in this place, which is this place I've marked out already as our first top in the market. And when it comes to triple tops in the market, we expect the second top to break the first top away and become the major point in the market, whereby the market doesn't have to break again. Then from there, we have our third top, which is this place that gets almost equal with the first top in the market. But the second top will never be broken. That's what makes it a triple top in the market. And from there, we have our neckline around this place, which is this place that I use as my breakdown in the market. That's my neckline in the market. Then we get a retest around that place. It's not a must that on the triple top, the market will have to just come and get a retest around it. Then from there, the market will start going to the downside. But on this triple top, it is very, very compulsory that the third top shouldn't be broken. That's what makes it a triple top in the market. And if you look at this place, you can see this candle around this place. This is a continuational candle around this place, telling us that the market is not going to break that place in this market. So this market right now just came back and got a retest around this place. Then from there, we have our lower high, and from there the market kept dropping to the downside also. So this is how the triple top works in the market. So look at this, you can see everything that's happened in this market. This is an uptrend that just changed to a downtrend in the market because of what? The triple top in this market. So that's how the triple top pattern works in the market. So let me show you how the triple bottom works in the market, so you can get to understand these things in a different way also. So looking at this place, we have our first bottom in the market already, and this is our second bottom in the market. So what happens in the market is that once we have the first bottom, the market will just rise up a little bit, but not to break this other point in the market. That's what makes it a first bottom in the market. Then from there the market will just have to go down again and break that first bottom. That is a sign that the market is about to change its direction and move to the upside. Because whenever we're trading triple bottom patterns in the market, we expect the market to go to the upside. So from there the market just have to get this place and break this first bottom in the market. So that was how we got our second bottom in this market. Then the second bottom, we also have to come back and break the first bottom in this place. So this place whereby the first bottom reversed from the second bottom, we have to break it. That's why the market broke it in this place. But still yet the market is not expected to break this major point in the market, which is this bearish market around this place that's about to turn to a bullish market right now. So look at what's going to happen again. The market just have to come back again and get very close to this our second bottom in the market, and the market is not expected to break the second bottom in the market. So that's how we got our third bottom in this place. Then at this place, which is our third bottom in the market, we expect the market to rise to the upside. Then from the upside, we get our neckline in the market. So this neckline point is our area whereby we expect that from there we can enter the market and see reasonable results from the market. So sometimes the market gets to reverse and get a test around this neckline. But if you see candles like this, you know that this is an another block candle around this place, and you expect the market to keep pushing to the upside. So this is a strong bullish candle around this place, and we don't expect the market to get back to this place, but I have to take our entries around this place because this candle is a good candle in the market, and it's a very strong bullish candle in the market also. And if you look at this place, you can see this engulfing candle around this place. So that's a sign that this is going to move to the upside also. So whenever you see these opportunities in the market, make sure you get to know them and know what the candle is saying in the market. Then from there you can know if you're expected to wait for the market to reverse or if you're expected to enter at that point. Then follow up with the trend of the market. And don't forget, whenever we're trading triple bottoms in the market, we expect the market to buy, and whenever we're trading triple tops in the market, we expect the market to sell also in the market. So that's how it is in the market. So let's get into the fourth best chart pattern in the market, so I can explain that also for you to get to understand it and know what to do at the right time also in the market. So this is our fourth chart pattern that I'm going to explain in this video, and I'm going to use this arrow to explain it in such a way that you get to understand it faster also, just like the way we have been doing it. So let's use the arrow right now and start it. So the name of this chart pattern is called the head and shoulder pattern, and this pattern is also very good when it comes to the market. I will make a lot of profit from trading this pattern also in the market. So that's the reason why I had to bring it out, so I can explain it for you so you can get to understand it also and follow up with it whenever I see it in the market and make more money from the market also. So look at this place whereby we have our shoulder in this place, then from there we have our head. So this is how this one looks like. It looks like a W sign, something like that. Then the market will also come back and get a shoulder around this place. So the two shoulders must be equal, and sometimes one might be bigger than the other one. But if the head is bigger than the first shoulder, that is a sign that the market is having an head and shoulder pattern in the market. So this place is the first shoulder, this place is the second shoulder, and this is our head in the market. And what it happens when it comes to head and shoulder patterns in the market, once the market gets to this point, which is the place where we used to draw our neckline in the market, which is the first shoulder in the market, then the market will just go back to the upside again, and the market has to break this first shoulder. Then once the head breaks into it, we have our neckline, which is this point, which is our first shoulder. Then the second shoulder will come out in the market. Then we have a retest around this place. So in this one, it is compulsory that we should have a retest in this market in order for us to know that what we are doing in the market is actually accurate. So once the market gets back to this place, then from there the market will start falling to the downside again. That's where they call the break of the neckline. And if you look at this place where we have the break of neckline, that is where the head will have to come and break the first shoulder. Then from there we can get the second shoulder in the market. Then from there we can also get this retest, which is very important for us to take this trade. So the retest is the confirmation for this head and shoulder pattern in the market, and once we just get it, we start moving to the downside also in the market. So that's one good thing you need to know about this head and shoulder pattern in the market. Let me show you how it looks like on the normal chart. So this is how the head and shoulder pattern looks like in the market. And looking at our arrow, you can see the first shoulder in this place, and you can see the second shoulder in this place, and you can see the head. And just like the way I've explained it using that diagram, you can see that if the market gets to the upside, the market has an head in that place, and the market has to use the head and break the first shoulder. So once the first shoulder gets broken in this place, we get our second shoulder. The second shoulder might not be equal with the first shoulder, but what happens in the market is that we should get a retest around that place. Then from there we can get the retest to the downside. So looking at this place, you can see the retest we got around that place, and you can see this candle formation around this place. This is a strong sign that the bulls are losing strength in the market and the bears are taking over in the market. So that's one thing you need to know about these head and shoulder patterns in the market. And you can see the break of neckline. That's the place where we expect the head to break it, then from there we can get the second shoulder, just like the way I explained in the first video, guys. So that's how it is in the market. This is how the head and shoulder looks like in the market. Whenever I see opportunities like this in the market, make sure you take it and make reasonable money from the market also, because every knowledge you have as a trader is an opportunity for you to make more money in the market. Keep this in mind and don't play with these opportunities you see in the market in order for you to make more money from the market also. So that's it about this head and shoulder pattern. And on these head and shoulder patterns in the market, we expect the market to do what? To sell from this part to the downside. So this is our inverse head and shoulder in the market, and we are going to use this arrow to mark it out so that I can know the things we're going to do on this also and get to do them in the right place and make money from it also. So look at our arrow in this place. We're going to use it to mark the things we're going to do in this one also. So if you look at the structure around this place, you can see our first shoulder around this place, and the market has to break it in order to form the new head. Then from there the market will just have to break the neckline also, or get very close to it. Then we get the second shoulder, which is our right shoulder in this place. Then from there the market has to break the neckline, then probably get a retest on that place due to the candle formation that is formed around that place. Then from there we can start buying on this one, because if you check on this one, you know that we are expected to take buys in the market, and on the head and shoulder pattern in the market we have to sell in the market. So look at how it looks like also on the chart. This is how the inverse head and shoulder looks like in the market. Look at the first shoulder in this place, which is the left shoulder. Now look at our head in this place, and if you look closely on this one, you see that we have our second shoulder, which is our right shoulder, very close to the head. Why? Because there's a kind of rejection around this place, and market is expected to take this first place away, which is the first place that should have gone up a little bit. Then from there we get our second shoulder, but the market couldn't go up in that place, so we had another move to the upside and we got the second shoulder around this place. So looking at this place, you can see some kind of rejection around this place also. So the rejection around this place is a sign that we can take our trades or our entries around this place, or we can wait for this place, which is our neckline, and which is also the proper place where we should take our entry on the head and shoulder patterns in the market. So on this inverse head and shoulder, we can take entry on this place, and we can also take entry on this place due to the candle formation that we see in the market, so we can get to do the right things and make more money from it, guys. So don't forget, on this one you buy, and on the other one, which is the head and shoulder, you sell in the market. So this is the inverse head and shoulder in the market. Let's get to other chart patterns so I can get to explain them more for you again, so you can get to choose the one that works for you and focus on it while you trade the market also. So let's go. So the fifth one, which I'm going to explain in today's video, is the falling wedge in the market and also the rising wedge in the market. So these two are also very important when it comes to chart pattern trading in the market. So we're going to use this arrow just like the way we used to do, and we are going to use it to explain everything right now on this chart. So on the falling wedge in the market, we expect the market to drop a little bit, then we bring out our trend line tool, which is the tool we use on this one. So the trend line tool is what is going to confirm if you're going to get that falling wedge in the market, because when it comes to this falling wedge in the market has a target or a place whereby the market is expected to get back to. Then from there the market will start following with the trend. Then from there we can get our entry around that place in this market. So what happens on this falling wedge is that the market will start behaving as if it's going to go to the downside. Then all of a sudden the market will just change its movement, and this works with the trend line tool and support tools in the market. So when it comes to the falling wedge in the market, we get our first touch around this place. Then from there we bring out our trend line tool, so that once the market gets to the second touch, which is our second test around that place, then from there we can expect that the market shouldn't break this second point again. Then from there we expect the market to get lower again, getting close to that place whereby we have our support zone in the market. Then from there the market can just push to the upside again. So this is another trend line around this place that's identifying that the market should get back to a support zone in the market. Then from there we can get our entry, and the market at this point has to come out and break this place, which is our third point in the market. Then from there sometimes we get a retest on the trend line in the market. Then from there we keep pushing to the upside. So looking at this one, this is just a diagram of it, and when I get to the chart, I will get to explain it more for you so you can get to know these things faster in the market also. And looking at this other side, we have our rising wedge in the market, and this is what to expect on this one. Just like this one is for buying market, this one is for selling market in the market. So let me mark it out for you guys. Then on this other side, whereby we have the rising edge in the market, we expect the market to sell. So the market will start behaving as if it's going to the upside. Then all of a sudden, if the market just get to the support zone that is around that place, then the market will just follow up with the trend, and from the trend the market will have to come and break the trend line in the market. Then due to the candle that we have in the market at that point, if it is a continental candle in the market will keep dropping to the downside. And if it is a reversal candle in the market, then we expect the market to get a retest around this place, and from there we keep having our sales in the market also. So that's how the rising edge works in the market. Because on the falling one right now, we expect the market to fall, and from there the market will just get a bullish move again. Then from there the market keep going to the upside, and on the rising one we expect the market to start behaving as if it's going to go to the upside. Then all of a sudden the market will just change its market direction, and the market will start going to the downside also. So that's one thing about them, and you need to keep it in mind. So let's get back to the chart so that I can use the chart and explain this for you in a better way, so you can get to understand these things faster also in the market. So this is how the falling wedge looks like in the market, and you can see the trend line on this one. You can see the second trend line whereby the market is not expected to break any point at all. Then from there the market will just have to get back to the support zone, whereby the market is expected to move from that side to the upside. If I expand my screen a little bit, you can see that we have a support zone around that place, but I just want to explain everything in a simple way for you all to get to understand it faster. So looking at that place right now, we have our retest point, which is this third part whereby I used to mark out in the chart, which is the third part. And from there the market got a retest around this place and started pushing to the upside. And when it comes to all this falling wedge and rising wedge in the market, once the market start pushing, it's going to remove all those parts whereby the market consolidated in that trend line. Then from there we can get a nice reward on the trade that we took in the market. If you can look at our risk to reward ratio in this place, you can see that the risk is very low and the reward is big. And from there the market will just have to come back and take this point away, which is our first point in the market whereby we got our falling wedge from. So that's another thing about this falling wedge that you need to know. And when it comes to the rising wedge, you know what to expect in the market in this place is for the market to sell. And you can see this place whereby the market got the first touch around this place, then the second touch came back to this place, and the third touch came around this place. Then the market has to get back to that place whereby we expect the market to get our support zone around. Then from there the market got a retest. So looking at this place, you can see some candle whereby the market is telling us this candle is a retest candle in the market, and this is a rejection candle in the market also. And from there the market will keep going to the downside. So that's one thing about this rising wedge in the market that you need to know also. So looking at this place whereby we got a retest around this place, the market started dropping to the downside. And if you look at this place very well, you can see that the market has taken this first point away, which is the first wedge in this market, and that is a good risk to reward ratio in the market, and day traders can use this to make a lot of money from the market every day. All you just have to do is know how to spot it, then from there you can get to make more money on the chart. So that's one thing about this rising and falling edge in the market. Let's get to another chart pattern in the market. Let me get to explain that one also for you. So this is the sixth chart pattern that we're going to explain in today's video, and I want you to pay very good attention to this one so that once I explain it, you can get to understand these things faster in the market. So the name of this one is bullish rectangle pattern in the market, and this is how this one works in the market. It works like a support and resistance zones in the market, and on this one you can see what the market is doing right there. This is our first support zone, and this is our resistance zone in this market. So when we have a bullish rectangular pattern that is following up with a trend and the market is going to the upside, what we're going to do is that we are going to expect the market to get to this point, which is our resistance zone, and this place is going to be our support zone in the market. I think I should mark that so you can get to understand it faster also. So that is our support zone in that place, and that is our resistance zone in this market. So I've marked it out so that you get to understand this faster. So in this place we expect the market not to break the support zone, and we expect the market to break this resistance zone because this is a bullish rectangular pattern. And if we are in a bearish rectangular pattern, we expect the market to break the support zone in this market. So look at what is going to happen. This place, which is our support zone, is our major entry in this market, and we expect the market to break this resistance zone. So we got the first move around this place, and we got the second move to confirm that this is going to be a resistance point in the market, and the market was not able to even break it again. That's a strong sign that this is a good resistance zone in this market. So when we got the second test and we came back again to the support zone, the market did not break the support zone also in this market. We expected another resistance point in this market, which the market got again and tested it again. The market will just come back to this place, which is our third point in the market. Then from there the market will just come back and break this place. So it's either the market breaks a little bit and got a retest based on the candle that was formed around that place, or the market will just keep pushing to the upside. So at this point we expected to get our entry, which is after the first one, the second one, and the third one, which is a confirmation that this is going to stand strong in the market. And if you look at this support zone also, you can see that the market did not break it at all. So that's a strong confirmation that what is going to happen in the market is very, very good. So that's a strong confirmation that this is a bullish rectangular pattern in the market, and from this place we expect the market to keep pushing to the upside. That's why we have our entry around that place and we have our stop loss around this place. And you know what to do already. Once the first one did not break, the second one did not break, and the third one did not break it, we will bring out our stop loss and drop it below it a little bit. Then from there we can determine if the market is going to go to the upside or if you're going to lose little amount of money on this one. So that's one thing you need to know about this bullish rectangular pattern in the market. So let me just get to explain the bearish rectangular pattern in the market. Then I can get to show you on how it looks like on the chart also, so you can get to know it when you see it on the chart also. So this is a bearish rectangular pattern in the market, and from the name alone you know that this is going to be a selling market. So that word bearish means selling in the market, in case you don't know it. So we have our first place in the market, which is this resistance level in the market, because on this one the resistance level or zones in the market are stronger than the support levels in the market. So the market came to the first place and couldn't break it. The market had to come to the support level again and tell us that this might be a bearish rectangular pattern in the market. Then the market still came back to the second place again. It couldn't break it. Then we got this third place, which is our third movement in the market, and from this place we expected to get our entry if we want to go aggressively on this market. But the major place whereby we expected to get our entry is on the support level in this market. So look at what's going to happen right now. So what's going to happen if you get to meet this opportunity in the market is that this place whereby you got the third level around, you're going to place your stop loss above it. And looking at this place, you can see that the market got a retest around that place. You can see the candle that was formed around this place, and the market came back and retested it. So this retest alone is a strong sign that this is going to be a very good bearish rectangular pattern. And from there we keep getting the market to sell to the downside again. So listening from the name, you know that on the bullish one you're expected to buy, and on the bearish one you're expected to do what? Sell in the market. So that's all you need to know about these rectangular patterns in the market. And I want you to pay attention to the levels in the market, which is this place where we have our resistance level. This is the first one, and this is the second one, and this is the third one. So always take note of this, so that whenever I see opportunities in the market, you get to know what the market is actually telling you in that chart pattern, and get to know if you have to enter on that chart pattern or if you have to leave it, and get to find another one that you understand very well before you can get into the market. So let's get on that chart pattern in the market so you can get to know the one you have to choose when you spot opportunities in the market. So let's get to the seventh one. So the seventh chart pattern that we're going to talk about today is the ascending and descending triangles in the market, and I'll be using this arrow to explain it just like we have been doing since. So on this ascending and descending triangle, we make use of our support lines and our trend lines in the market. If you look at this place, you can see that support line around that place, and you can see that trend line around this place. If you look at this place also, you can also see a support line around this place, and you can also see a trend line around this place. So this side is for what? The descending side, and this side is for ascending side. So just know the difference also, so you don't get to confuse yourself on this. So when we want to spot this one, we spot it in continuation patterns in the market. Look at what is happening in the market. We have to draw our trend line around this place. That's from this part. Then we drag it to the upside. Then we got the first rejection around this place. So we have to bring out our support line around that place. Then we have to keep it there till we get the second one. Then the third one that we have to break out of this place again. Then the market will keep going to the upside. And looking at this ascending triangle in the market, you can see that the market has to be in a triangular form, just like the name sounds in the market. Then from there the market got the first move around this place and got the second rejection around this place. Then the third one, which from there the market had to keep pushing to the upside. So this is a continuation pattern. When we have ascending triangles in the market, we expect the market to keep pushing to the upside. And looking at this other part, which is the descending triangle in the market, you can see that the market came around this place, got a retest on that triangle that is trying to form around this place, which is this trend line in this place. So the trend line and the support level has to join together in order to give us an ascending or descending triangle in the market. So looking at this descending side, you can see that this trend line, the market came, got the first retest around that place, got the second retest around this place, and got the third retest around this place. Then from there we have our rectangular line, which is the support zone in this market. Then we expect the market to break it. Then from there the market can keep going to the downside. And if you can look very well, you can see that on the descending triangle we have our trend line on the upside, and on the ascending triangle we have our trend line on the downside. So on this place we're expecting the market to keep buying, and on this place we're expecting the market to keep selling, just like the way the word sound descending and ascending in the market. So let's get to the 8th chart pattern in the market so I can get to explain it for you, so you can see them also in the market and get to make money from it also. So let's get to that point also. So the 8th chart pattern that we're going to talk about today is the cup and handle patterns in the market. So when we talk about these cup and handle patterns in the market, some people just think that the market will just come and form a U shape or get a cup handle, then from there the market will just keep going to the upside. But no, it doesn't work that way. This is how it looks like in the market. Then on the market you just get some structure that looks like it. Not that it's going to get a U shape in the market, but it's going to give it that sign that this is going to go back to this point, which is our first zone in this market. Then from there the market will just get a retest again, which the retest is not expected to break it. Then from there the market will get to this point, get the first retest again, then have to go down a little bit and get a retest at this support zone in the market. Then from there the market can get the handle and the market will keep pushing to the upside. So once the market just break this upside, which is our resistance point in this place, then you can get your entries around this place, whereby the market has broken it already, because sometimes we still get a retest around that place due to the candle that was formed around that place. The major thing is let this first place get retested again and let the market not break that place. Then from there we can just get the handle and keep going to the upside. So when you see the market trying to form a U shape in the market, just know that it's the cup and handle pattern that is trying to form. Then all you just have to do is get the handle. Once you get the handle, then that's a confirmation that this is going to be a cup and handle pattern truly in the market. Then from there we expect the market to break and still go to the upside again if you're in the buying market. And if the market is in the selling market, you expect the market to go to the downside also. So you have to make sure you know these things also and get to use them at the right time and know what to do in the market. So that's it about this part. Let's get to the 9th chart pattern, which I'm also going to explain for you so you can get to understand it and make more money from the market also. So this is the 9th chart pattern that I'm going to explain for you guys today, so you can get to understand it also and make reasonable money from the market also. So look at this one. It's called the M pattern, and on the M pattern we expect the market to drop to the downside, and we have another one which I'm going to explain in this video also, but I'd love to explain this one first before I can get to the second one. So on this M pattern right now, what happens is that the market will just rise to a resistance point in the market. Then from there the market will just drop a little bit to the downside. Then from there the market will just get another retest again. So if the market get the second retest, that's where the market will have to drop from there and go to the downside. Sometimes the market do get equal resistance point on the M pattern, and sometimes the market doesn't get equal resistance point but just come very close to the first resistance point. Then from there the market will start dropping immediately. There's nothing like the market getting to the neckline to get a retest before anything can happen on this one. So that's how the M pattern works in the market. You can get your entry at the second resistance point, or you can get your entry at the neckline, but there's nothing like the market coming back to come and retest there, or the market breaking the neckline or anything like that on these M patterns in the market. So that's how this one works in the market, and it's very simple to spot in the market, and it normally occurs in the market. The only thing for you to do is make sure you follow up with the trend of the market, then get to know where you can get these M patterns in the market, except you got the other pattern which I'm going to explain right now in this video, so you can do the difference between the M patterns and the other pattern that I'm going to explain in this video right now. So the 10th pattern is the W pattern, and this W pattern is a different pattern on its own. Just like the way we have the M pattern, which is for us to spot out places whereby we can get our selling points in the market and the market will keep going to the downside. On the W pattern, it is a different case on its own. So looking at this place whereby we expect the market to drop to the support zone, then from the support zone we get a little bit move to the upside, then the market will just come back very close to it and form a W pattern in the market. Then from there the market will just push to the upside, and from there the market will keep going to the upside, guys. So that's one thing about this W pattern. It's just like an opposite of the M pattern. And what happens also is that in this place you don't get anything like a retest to the neckline or a break into the neckline, so the market will just keep going to the upside after this one happens in the market also. So that's all you need to know about the chart patterns in the market. And don't forget, the W pattern is for what? Buying market, while the M pattern is for selling markets. Keep this in mind and get to make use of it whenever you want to trade in the market. Congratulations to you if you watch this video to this point, because I'm very sure that you have understood a lot of things right now, and all you just have to do is apply these things on your chart and start making money from the market also. If you get to misunderstood any part of this video, you know what to do already. Just go back a little bit, get to watch it again and again, then you can get to just understand more of it. Then from there you can start making crazy figures from the market also. Chart patterns are very good in the market. Do not take it for granted. All you just have to do is know where to spot the right ones and make sure you follow up with the right ones. That's what will make you a profitable trader trading the chart patterns in the market also. So that's all for today's video. If you're new to the channel, make sure you hit that subscribe button, and if you're an old subscriber, you know what to do already, like the video and also share it with other traders so that they can get to watch it and learn more things about the chart also. So that's all for today. See you in the next one. Peace and love, guys.